My name is Omar. I'm one of your podcast hosts, and I'm also a lawyer at Treadstone Law. For most Canadians looking to buy, sell, or refinance real estate in Ontario, a lawyer is the last thing on their mind. They're busy dealing with banks, mortgage brokers, realtors, and when everything is said and done, they look for a law firm to finalize the transaction. At this stage, if something is broken, it's hard to fix. And believe me, I'm a real estate lawyer, I've seen it all. How do you gain the right help early on in the process? Speaking to a lawyer one on one can get real expensive real quick, and it's probably not the best idea. That is why Treadstone Law has launched several resources for Canadians to have access to the information when they need it the most. You can sign up for one of our online workshops or to our email list to receive information you need when you need it. This information is designed for you to be better prepared and avoid costly mistakes. And for a limited time, it's free. Visit treadstonelaw.ca/MAS offer or click the link below. Welcome to another podcast of Hustle and Grit. My name is Omar. I'm one of your hosts here, and today I have a special guest with me, joining me here. Um, I have Issac Jirjis. He is an experienced mortgage broker. He's been in the industry for over 10 years. He has a ton of experience, not just working in the traditional lender space. He also works with a lot of private lenders and a lot of unique kind of financing arrangements. Issac, I felt, has a really interesting journey in terms of where he went through to before becoming a mortgage broker and the skills that kind of his background provided him. So I think it'll be a really interesting discussion today. Welcome to the podcast, Issac.
Thank you for having me, Omar.
No problem. So I guess where should we start? So much to go over. So I guess you've been in the industry for 10 years. What
Yeah,
made you want to become a mortgage broker?
yeah. So I got in the industry even a little bit earlier, like 2010 is when I got in. So almost 12 years now. So it's been a bit longer. But originally, I started off working in a sales capacity with a family business. So my family's been in the furniture business for a long time, and they had like a lot of different locations and a lot of different like factories and warehouses and sales locations. So basically, my father had ended up owning a lot of commercial real estate at that time. And he had consistently been looking for mortgage brokers to help him finance these properties, sometimes refinance to invest in his business. And I got to learn about the process of mortgage brokering, especially on the commercial side at that time, because I was a lot younger and my father was not so tech savvy. So I would be the one dealing with the brokers at those times, like sending documents back and forth. And I kind of got a good feel for how it works. And I was very interested in the whole brokering side because it did look to be, first of all, very lucrative as a career. And it was also very interesting to me about how it all worked. So
Interesting.
basically, that's how I kind of got interested into brokering, was through my father, looking at different mortgage options at that time with his multiple properties.
Interesting. So the I guess to step back a bit, so the role with your dad or the business, was it more of kind of a wholesale type of business, retail, or what kind of sales capacity were you working in? I guess to give some context.
Of course. So, when you're growing up, my father made me do everything. So basically, he used to manufacture furniture, which he would sell to the general public. He would also manufacture to sell wholesale to certain companies, like as a supplier. So for me, I got my experience in sales on the sales floor when we would sell to the general public. So it really depended on what my dad needed that day. Especially when I was in school, I would go in like after school or during the summers. And some days I would, hop on the showroom, dress up, and start selling to people, learning how to sell. Other days, he needed me to help, deliver furniture in a truck, or some days even help out in the factory if they were short staffed. So I kind of got a feel for all different parts of the business, but definitely the sales part. I've been selling furniture since I was even younger than a teen, basically.
And it's nice because like uh, people often overlook the value of that like real experience at such a young age because the focus is usually, okay, I'm learning math or English or whatever at school, and those are great things to do. You got to learn at school too, but that kind of real life experience at an early age, I think it's really foundational in terms of your whole career as well. Would you agree, or do you think it helped you in your mortgage business?
Oh yeah, it helped a lot. Just being able to talk to like over the years, like say thousands of different customers, negotiating prices, discussing options. Even when it comes to furniture, everything is related. Whatever you're selling, you want to fit the client's needs, like what they're looking for. So like when it came to furniture, the client wants they're in this specific budget or that budget. Um, Even on the other side, when my father had done some importing business for furniture, he even took me to China, me and my younger brother, and we were really young. And when we had gone to China, like he would literally send us to a specific supplier because he'd be speaking to others at a general market, basically. And we would get pricing, and then he would tell us to negotiate better prices. And it's just a great experience because from the international side of like going to different countries, and then even dealing here with specific customers, end users, buying these items, everything was negotiation and just suiting the client's needs.
And then it's a good fit. I think it's also kind of uh, your role right now as a mortgage broker. There's so much of that involved, right? It's not just negotiating in terms of understanding what the client's needs are and then getting them on board to hire your services, but on the other end, it's going to that bank and convincing them that this is the right person for you to give a mortgage to, right? So there is that balancing act that I think it's really fundamental in terms of having those foundational skills to be able to navigate that. That's a unique experience, especially at that age, right? Where you're young, you're nervous about doing anything, and then your dad's like, "Go speak to those people and, and get me a quote and figure this out," right? So your
Oh
dad
yeah.
did good. I think I rant a lot about this, especially to my wife a lot too. I'll say how like the real I mentioned earlier too that real experience you can't replace, right? Especially when you're a kid. You cannot replace like you having the confidence, building the confidence to go up to them and speaking and knowing what to say as well, right? So your dad had the right mindset in kind of teaching you guys too.
Oh yeah. Thank you. Thank you. Yeah, I know there was times when we would like be annoyed with him because like, we'd be in still like we'd be younger, right? So we'd be in school and high school and it'd be our summers and that's where all our friends are going to Wonderland or going out and having fun and going to the cottage. And he would wake me up bright and early, say, "Hey, today you're coming to the store."
Work
so
time.
so,
Nice,
so
nice.
a lot of summers were missed with friends, but at the end of the day, I think it all helped build, my character and build like my experience of where I am today. So I can't complain after all that.
So then, moving on, then how did you like? So you mentioned you had your dad had some commercial properties. You were kind of involved in learning about the process of getting the mortgages or exchanging the documents. So how did that transition occur? Did you decide I can kind of help my dad secure this mortgage as a broker, or did you go another way, or how did that happen?
Yeah, so basically, like I had worked with my father for a long time in sales. I had tried other sales roles with different businesses. I even had tried to. I had done about a year of selling cars as well. I had done that. I had an uncle actually that had a car dealership, a used car dealership, and I got some experience there with him in that aspect. But yeah, no, overall, just I went into a few different things in sales positions, tried a few things out, and then at the end, like the brokering thing always stuck to me. Like, hey, like that was something I could really see myself doing because I like sales, and I just wanted to get back into it. But I just went ahead and said, like, I searched how to get licensed. This is back in 2010, and I went online, and at that time, I think Seneca College was offering the program. I just got the license and just kind of jumped into the market. And I did have a few contacts in the brokers space that had recommend I get in, like especially from my father's side, those commercial brokers. And I did like attempt to work on my father's deals in the beginning, but when you start out in the business, commercial brokering is a whole different animal compared to residential. So I had to definitely get some help from my colleagues, which is natural. But yeah, I definitely tried to help my dad first. And then from then on, I kind of branched over to helping, the general public.
And this was what almost 12 years ago now. So
Yeah.
industry has kind of went on like a rapid increase since then, right? So you had the doubling, tripling. I don't even know what since 12 years the prices. How else do you think the industry has changed since you did start, other than just rapid increase in prices?
Of course, yeah. I mean, the price appreciation is insane. If you've owned anything 12 years ago, you'll be laughing today if you've held on to that property. But what's changed a lot since when I started to now is like mortgage rules are consistently changing. So, every few years, especially from like 2017 and on, the government's been interfering, and that's their job to look at rates and everything. But they've changed the way people qualify for mortgages. So, when we know when they introduced the stress test a few years ago, back in around 2018, that kind of limited people's buying power by about 30% less than what they could have qualified beforehand. So, a lot of changes when it comes to basically the stress test, even lending guidelines. A lot of lenders with B20, there was new OSFI guidelines put out there, so all the lenders had to change how they lend. So it's definitely getting more difficult year over year. But as those changes come, lenders also have to adapt and change their product guidelines and programs. And we just have to roll with the punches and see what's there. The government will change things, and we have to adapt and figure out solutions for clients to get their home financing.
So I had this. We'll talk about the market later, if we have time. But since you brought it up, do you think there is going to be more tightening of restrictions around lending because of the market, or how do you see that happening?
So, the way I see it is with the stress test right now, we were qualifying everybody at 5.25%. That was the stress test with the bank options. And people were getting rates, at basically up to 6 months ago, like below 2%, whether it's fixed or variable and whatnot. So, we've been qualifying people at a much higher standard in Canada generally than compared to what's out there in the world, like with other countries. And the rates have gone up recently. So like we have like variable rates right now, let's say on an insured mortgage at like prime minus 105, for example. The rates change daily. So you're looking at, 1.65% on a variable roughly. And then on a fixed right now, you're looking at around on a high ratio, about 3.59. So as the rates go up, so especially the fixed rates, now the actual qualifying rates are going higher as well. So if you're getting a rate at 3.59, now the stress test is going to be 5.59 rather than 5.25. So that's going to have an impact for sure. And as rates keep going up, which they seem to be going up right now, until the government decides to maybe take a pause and see how things go, I think it's going to get tougher and tougher, especially with the stress test, because that's increasing. That level is not 5.25 anymore. If you're going fixed, you're probably 5.59. And if rates go up to 4% on fixed rates, which could be possible, then you're looking at qualifying at 6% for that mortgage, which is going to limit your buying power already from where it was before.
Definitely, and they've been talking about a number of rate increases this year too. So I guess we'll see how it all plays out. But back to, I guess, the current topic, your, I guess, mortgage brokering journey. What in your last 12 years, you've obviously worked with tons of clients, and you've figured out what works, what doesn't. What do you think are characteristics that make a good mortgage broker?
Very good question. So number one, as a mortgage broker, you have to have a lot of product knowledge. So you have to know the ins and outs of basically every lender. There's a tons of lenders that we have access to. So, when you're not working on a file, you should be reviewing like week by week or month by month every lender that you work with and their programs, because you might get a call in from a client in a unique situation. And because you have that knowledge and you've researched what the client's looking for, you can quickly like put in your head, hey, this is a Scotia deal, or this is a First National deal, or this will work here or there. So definitely knowing your products is probably the key, number one. The other part to brokering is understanding your client's needs. So what exactly are they looking for? What is their timeline in that property? Do they plan to live there short term, long term? Are they more concerned about rates going up, or are they willing to take the lower rate on the variable and ride it out and see where things go? And also, what are their future plans? Do they plan to buy other properties? Do they plan to pull out equity to invest in other things? So basically, product knowledge, knowing where to put them and what products are available, and knowing what the client needs exactly is basically the two most important things that I could see when it comes to brokering.
So what's the process look like if someone wants to work with you? So how do they kind of get in touch with you, or how does that work?
Yeah, so generally, usually we start off with a phone call, or a client might reach out to me with a referral by email, and I'll set up a time to speak with them. I like to do an initial consultation first, so we usually set up a call. I mean, that call could take depends on the situation, but in general, it could be anywhere from 30 minutes to an hour initial consultation to figure out first of all what the client's looking for, because sometimes the client's looking for something, but sometimes like the best advice for the client is to stay in their current position. So I have to kind of do a quick review of what they're looking for. And then if everything looks good, if they want to proceed and we discuss some potential options, then I would start the application process. So I usually send out an email to the client with a full list of documentation that I'll need up front to get them a quicker answer and a full approval. Send it out to the client, and then we can do either an online application where the client can fill it out, or the client can send me the documentation. I can manually input that application for them and call them while I do it live. So that's usually the process. And once I have the application on my system, I can give the client a better understanding of what they should expect in regards to products, rates, and the whole gist of everything, or even what they can pre-qualify for. And then we go from there. So if it's like a purchase, I'll pre-qualify the client, say, you can go put an offer at this price range, come back to me with an accepted offer, and then we'll work on getting you the final approval with our lenders. Or if it was a refinance, I'll kind of know upfront, hey, this is what you should expect to get. If you're happy with this product, let me submit it to the lender, and we should have an approval within 24 to 48 hours.
So to confirm, then, so it's completely digital. They don't have to come into any office or anything, or how does that work?
Yeah, correct. Especially with COVID, especially starting of 2020, we had to pivot to make everything more digital. So most of the lenders will accept digital signing. And to be honest, it saves the client a lot of time, and it saves even the brokers a lot of time and money, because if we had to literally meet, let's say you'd had 5 applications that day that you had to take, and you had to meet 5 different clients, and all those 5 clients had to drive an hour this way, an hour back, parking, a whole bunch of stuff. You just find out it's so inefficient the way we were doing things before. And I'd rather conserve my time to work on my clients' files than spend time in meetings, because we can do everything over the phone, we can do everything over email, we can video call, we can do signing appointments on video, just like even our lawyers are doing that these days. So lawyers are signing up clients via video conference. Worst case scenario, if the client can't make it to the office, we can courier a package for them to sign, have it delivered back. We can send them a scan and email copy, they can print it, scan it back. So it's just inefficient to meet people all the time. There are some cases where the client specifically wants to meet, which is fine. We don't mind to meet with our clients. It's just, saving them their time as well, because my physical office is downtown Toronto. And if I have a client that's coming from Brampton or Ajax or, anywhere outside, a lot of people don't want to go through the traffic and park downtown and do all those things.
So
So
I
it's definitely
completely
more,
agree.
yeah,
Yeah,
no,
no,
it's
and we had a similar experience as well. At our firm too, we had, like you're saying, people don't like to make that long commute, right? And then spend extra time as well, because you traveled an hour, might as well spend another hour with the broker, talk to them about the file. You know what I mean? So
yes.
in our end too, I think we had a network of signing offices, 30 plus signing offices across Ontario, as far north as Timmins, Thunder Bay, Ottawa, and then when COVID hit, our rules changed, which you mentioned, that allowed us to do everything digitally, and then we were able to, even though people had the option of going to an office nearby, because we had this network, people wanted to stay at home, right? Do it on their couch, so it
Oh,
kind of makes it easier.
Oh yeah, people want what's convenient, right? And at the same time, it's better for the client, because if I'm working on your file, talking to you live and going through the application, I can work on it faster than if we sit down and talk about the application, because we're just talking about the application for an hour or two. Meanwhile, I could have completed the application and actually submitted it for approval in the time that we discussed it over the phone. So a quicker answer for the client, quicker approval. I think it's a win-win for everybody.
Definitely. So how can someone who's looking to get in touch with you, how can they contact you? What's the best way?
Oh yeah, well they can go to my website, which is we can post a link later on,
Yep,
but
should be below.
perfect. Yeah. So it's www.isaacjirjis.com. I am on all social media platforms, so you can go to my Facebook page, my Instagram page. We have an online application, and the best feature these days with mortgage architects is we have an actual mortgage app. So the mortgage app itself, which you can download, is great because it has so many calculators that will answer literally almost all of your questions. Like, so let's say it's midnight and you're looking at a property and you want to know what's my mortgage going to cost. So you can just download my app. You can literally input the details, and it'll give you the payments. And not just that, it has updated rates for all the lenders. So you can actually see, hey, like Scotia's offering this or Duke is offering that, and you can actually plug it in real time. And it can even send me as the broker an update saying this client pre-qualified for this mortgage amount. Contact the client tomorrow to consult with them and update the application. So it's a really good tool, and it saves everybody a bunch of time, and it keeps you up to date with the rates. So you don't have to go online every day to different websites to figure out who has the best rates when it's all in one place on the mortgage app.
Nice.
Yes.
Seems pretty useful. So what is it called? Mortgage Architects? Did you just Google that or on the App
Uh,
Store it should be available?
yeah, so if you go to my website, it'll have a link to the app itself. So
Okay.
you can download it on your iPhone if you have the iOS software or Android, and there's all links online. So on that, we can direct you to that. And even on the link there, I'm adding also my YouTube channel, which will have links to videos which I talk about different topics. Because I find a lot of the times, clients want to discuss certain things, and sometimes your answer might be in those videos. So sometimes you go to the video and it'll answer most of those questions, and you can also book time anytime to discuss the file with me or your current situation.
Nice. So just to kind of reiterate, so Isaac's YouTube channel, Issac Jirjis, just search that on YouTube and it should pop up. I did the
yeah
same
if
thing.
you
It came up.
yeah if you go to YouTube, if you search Issac Jirjis mortgage professional, that will pop up there, and I can include a link later on as well to that. So
Awesome.
everything's there.
Perfect. Okay. So moving on. So let's get to, I guess, the next stage in our discussion. Let's talk a little bit about the real estate process. So advice for buyers generally, do's and don'ts, I guess, is a good way to describe it. So buying real estate is not something that people do every day, right? So it's natural that buyers may not understand the entire process. There might be aspects of it that are confusing or even intimidating. And then there's often common mistakes that different people are making in particular files. So maybe first time home buyers. So, what
Yeah.
do you think is the most common mistake first time home buyers make when it comes to financing their purchase?
Oh yeah, I mean, there's a lot of them, and the main thing a lot of applicants do is I see so many applicants approach me um, with an accepted offer. So they have an accepted offer, closing sometimes a ridiculous timeline, like closing in a week or two, or close.
Get me going.
Ideally, hopefully they give themselves more than a couple of weeks. But they approach me with this, and I say, okay, like I see you put in an offer, you have accepted offer, congratulations. I'm like, have you been pre-qualified before you spoke with me? They're like, no, we just went out and put an offer, and it's always frustrating because I start to panic because I'm like, first of all, I don't know what this client has for income. I don't know what they have for credit. I don't know their down payment situation. So then I have to start quickly moving on that file to see if what we can do for them. So I think getting pre-qualified is the most important thing. So let's say you're in touch with your realtor, and most professional realtors are going to ask the client, hey, have you been pre-qualified or pre-approved for a mortgage? And usually that's the first question because the realtor doesn't want to go around showing homes unless they know the client can actually buy a home. So getting pre-qualified is probably the most important step before you even want to look at putting an offer. And another major item too is clients that have less than 20% down. So you'll need to get a mortgage insurance. You'll have to qualify for an insured mortgage. So a lot of clients believe they're automatically going to get approved no matter what, and that's not the case. Especially for insured mortgages when you have less than 20% down. it's a very stringent like qualification process because credit has to be A1, like no issues with credit, and someone might have some issues which might hinder them from approval. And the other parts is income, right? So let's say you're self-employed. A lot of self-employed people write off a lot of their expenses and declare a lesser amount. So when it comes to insured mortgages, usually they don't look at your gross income. They look at your net income that you declared on your taxes. So if that number is very low, even though you make more on your gross side, they can only gross up your income so much. So definitely getting pre-qualified, making sure you can put an offer, and knowing what you should expect before you put that offer are the most important things when it comes to that process.
So pre-qualification, starting, I heard earlier, I guess, starting the process earlier rather than later, um, contacting you earlier in the process rather than after there's a firm agreement and closing in 2 weeks. And
Correct.
then and then pre-qualification. So I'm sure you have tons of stories too, where we'll have someone come in, and
Yeah.
the file is still kind of in the financing stage, but they decide to contact the lawyer early because they only contacted the mortgage broker a week before closing. So the mortgage
Yeah.
broker is kind of panicking, and then the client's panicking, and then it's just chaos. So I 100% agree with Isaac's advice there. Contact a mortgage broker as early as possible. Contact a lawyer as well as early as possible,
Yeah.
because you don't want to be in a situation where you're a week or two before closing and you're trying to start the process, right? That's a bad
For,
situation to be in.
for sure. And a lot of lenders, like there's some specific lenders, well, they tell you your file needs to be file complete. So all conditions completed, appraisal, income, everything needs to be complete 10 business days before funding. So 10 business days is basically 2 weeks before closing. So if you put an offer to close in 2 weeks, you literally had to have every condition done at that time.
Yesterday.
So I always tell people, hey, like give yourself, like, especially right now, everyone's super busy, like underwriters, lenders, everyone. So give yourself enough time to close, because why would you make it so hard on yourself and stressful to close like within a short time span? I'm telling people right now, if you like minimum closing, you should probably do 30 days minimum, like, but I recommend even going longer. Like if you can do a 45-day closing or a 60-day closing, it just makes it easier on the client and everyone involved, from the lawyer to the realtor to the broker to the underwriter. It just makes it a nice seamless process, because you don't want me
100%.
calling you last minute and asking for documents when there isn't a lot of time to complete a file. And if your documents aren't ready, or you haven't filed your taxes, or something's not ready, then you're putting yourself in a position not to get the best mortgage products available.
Yeah, and or the worst case scenario where you don't get approved, and now you're stuck with having to find another lender, all of that process. So really, I think it's the delays of just like you're saying, finding all the documents. That's a common complaint I hear, that
Yes.
mortgage brokers have to struggle with, right? Getting clients to find the right documents, the ones they can't find, whatever it is, and
Yeah,
then on the other end, if the lender doesn't approve, now you have to go and find another lender and go through that hassle. So
exactly.
contact as early as possible. I agree, 30, 45 days. The earlier you can do it, the better. I would say even before you start the process of buying, like as in I'm not looking at a house yet, get that pre-approval, right? Contact.
Oh yeah.
Yeah.
Makes sense. I mean, I've had clients where I've discussed their purchase a year before they actually ended up purchasing something. So like I'll have an initial consultation, I'll look at the numbers, I'm like, okay, well, this is what you should expect. And the client takes their time and they'll follow up with me every few months, let me know what's changing in their situation. And yeah, I mean, there's any day is the best day to start. So you start from today, even if you buy something a year later or 2 years later, it's fine. Just get that conversation going so you know what you need to do to be able to buy something.
If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer to your signing appointment, everything is done from the comfort of your own home. No need to take time off to visit a lawyer's office for your signing, when you can complete everything from your living room table. The best part is you don't have to pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us today. Enjoy the podcast. Makes sense. So when it comes to affordability, so affordability is a big issue for first-time home buyers and a lot of buyers generally. So do you have any advice for, I guess, first-time home buyers looking to get into a house?
Oh yeah, for sure. I mean, listen, it's never been harder for the younger generation, the millennials, for example, to get into the market because if you want to live in the GTA or somewhere, near the GTA, let's face it, the average selling price or home price is very expensive. Like we're at in GTA, you're average $1 million or more right now on something. So if you're kind of new in your career and you're not making that kind of income to qualify, some things I may recommend is just getting into the market wherever you can get into. So yeah, you might not be able to get into Toronto or the GTA or Vaughan or these different areas from the start on your first home. But if you can get into something and maybe hold on to that for a few years, build some equity, you may be in a position to be able to maybe sell or refinance and buy something in the future that you want to live in, like in closer to an area where you want to work. So that's one way. Another thing I might recommend too, if you have, let's say, a good job but just not enough down payment right now or needs some time, pre-construction is a good option for a lot of people. So let's say you're living at home with your family and you're making good money but you haven't saved up enough yet. You can get on a deposit structure with a builder for something that'll close in maybe a year or two or more from now. And then by the time that rolls around, you'll have enough savings to close on it and you'll be in a position to get into the market. So there's so many different avenues, like basically buying somewhere where you can afford. Even if you don't decide to live there, I mean, you could rent it out and still live with family and build equity, or you can live in it and commute. And in today's market, a lot of people are working from home or a hybrid model. So we're not all commuting 5 days a week from, for example, Barrie to downtown Toronto. It might be only 2 days a week or 3 days a week, or maybe fully from home. So it's changed in the way where you can kind of live almost anywhere with these changing conditions. And, that helps people get into markets that they couldn't get into before.
Good advice, especially the if someone doesn't have the down payment saved up, going for a pre-construction, and then
Yes,
that pushes out. Often, I think it's at least 1, 2, 3 years out before you'll have the house, and at that stage, they'll have to come to you for financing to actually purchase the house, right? So, in that process, when do you think they should be contacting you? When they're booking, later on? Is there
I,
is there a
I
sweet
think
spot?
Yeah, so definitely throughout the whole process, to be honest, because like I want to pre-qualify them even 2 or 3 years in advance. Like we can't guarantee what your rate will be in 2 or 3 years because nobody knows that. But when we look at the file with today's guidelines and what we have, we know that we're safe. So if we're putting, like for example, at the end of the day, if we're putting 20% down on this pre-construction property over the next 3 years, we know that we'll be able to get you a conventional mortgage based on the rules and how it works. So the process is get pre-qualified and then go ahead. You can go to the builder and sign something up if that was your like method of home ownership if you want to get a pre-construction. And then we follow up with you throughout the whole process because the builder will update you. There might be delays. You might end up closing earlier and need financing. But generally, when we do our mortgage final approval, the final rate will be done usually about 120 days before the final closing date. So we're going to be there throughout the beginning of the process, the middle, and the end, basically.
And especially, I think a common misconception is that if my pre-construction is closing in 2 years, 3 years, then I don't need to think about my mortgage until the very end. And what it seems like a big issue that arises in that circumstance is, okay, you didn't really think through whether you could even possibly get finance according to today's kind of your financial circumstances. So having that discussion with a mortgage broker, speaking to Isaac now, helps you understand that, okay, right now my financial situation is enough for me to get qualified. The down payment might be the barrier, but this is helping me resolve that, right? So that kind of
Exactly.
good advice. So when it comes to repeat home buyers, do you find that repeat home buyers make different mistakes from first time home buyers? And if so, what would those mistakes be?
Yeah. So with repeat home buyers, depending on what they're like, what they're trying to do, because I have some repeat home buyers that try to maintain and hold all their properties. So sometimes, for example, we'll have one buyer who has one house they bought 5 to 10 years ago, and now they want to buy a second house. And one of the, I wouldn't say mistakes, but everyone's different. But a lot of people end up selling their homes to buy the next home. And there's a few issues that I have with that. Number one, if you could qualify, for example, to own your current home, we might be able to extract equity from that home to buy the next home. Because it's always the hardest thing is always buying the first house. Buying the second house after that and the third usually becomes easier because if you leverage the equity in your current principal residence, you can buy other properties and makes it easier. So when you are selling, it is very expensive. Obviously, you've got real estate commissions first of all when you sell your house. So if your house is worth $1 million, 5% plus HST, you're looking at about 60K in just in expenses to sell that house and move. And then you have the expenses. Obviously, you might have a mortgage with a penalty. So you might have a few $1,000s there. So it could cost you like $70,000 to sell your average home. Meanwhile, you could have refinanced it, with basically very little expenses because when you refinance a mortgage, let's say you're going with a bank option, the only fees you really have are to discharge the existing mortgage and your legal fees to register that new mortgage. And you could be sitting on an extra $100 or $200,000 tax free in your hands to put as a down payment for the next house. So I think people should look at the two options. Sometimes selling is the right thing to do to buy the next one, depending on your qualifications. But if you're able to maintain that original principal residence and buy the second home with that leverage, I would recommend doing so if you can qualify and manage your payments.
I think that's especially true in the Canadian, or I guess yeah, generally Canadian market, because of how fast the appreciation of real estate has been for the last 5-10 years. You have homeowners with a $300,000 mortgage, house is worth 1.5 million. So much equity there for them to afford the payments, buy another house, and then
Oh,
keep growing that portfolio.
oh
Good
yeah, I've
advice.
had I've had clients that have a lot of equity in their homes, and sometimes the equity we pull out of their existing home is enough to buy the next home pretty much almost in cash. And then they can repeat that process when they find another property. It all depends on what you want. Like if you want to be, like, obviously if you're going to have one home that you live in and the other one's going to be a rental, do you want to be a landlord? Because some people are not cut out to be landlords. It is a good tool for building equity and wealth, but not everyone's up for the challenge to deal with a tenant or manage a property and all that. So it just depends what you want. Some people say, hey, I just want to have one home, live in it, sell everything, and then get my forever home. And that's fine. Everyone's different. But every situation we have to assess and make sure if the client can qualify.
Makes sense. So we talked about first-time home buyers, repeat buyers, now real estate investors. So you touched upon kind of how repeat buyers can become real estate investors as well. What would
Mhm.
you say are there common mistakes you find real estate investors make? What would they be?
The biggest mistake I'm seeing these days, especially in the GTA or the overall market, because it's very hot, is everybody thinks they're going to buy something and the price appreciation is their strategy. Oh, I bought it for $1 million. It's going to be worth 1.2 next year and 1.4 the next year and so on. And if you're buying something based on, it's kind of a gamble, to be honest, thinking that it's going to keep going up this way because we've been very fortunate in this market to have price appreciation where it's been. And there's a lot of factors that have dealt like have brought us to that point, like supply and demand and interest rates and everything. But if you're buying a property, or let's say a rental property, and you're buying it just based on the fact that it's going to appreciate or you think that it's going to appreciate, I would say that's a bad strategy. I would look at, if it's a rental property, does it cash flow? Does my does my rent cover my mortgage payments, my taxes, my heating, all my expenses? If I'm losing money and it's negative cash flow and the market doesn't continue to go up every year as it's been going, then I'm not making money, I'm losing money. So I always look at investment properties as, number one, if the cash flow is there, it's a good investment because you have positive cash flow, regardless of what happens with the market, if it's worth more or worth less. So that's one of the biggest mistakes because people keep buying investment properties and they've been lucky because the prices have been going up, but overall that can't happen forever. It's a cycle, right? Markets go up, markets come down, things change. So if you're buying for a short-term strategy to make an extra 100,000 or 200,000 in a few years, you can't count on that, is my point.
Honest advice that you rarely get in the real estate industry, because often the the main story is we're going to keep going up, keep buying, keep buying, keep buying, which has been happening. And I completely agree with you. Just because it's been happening does not mean it's going to keep happening, right? It might happen. It might happen at a slower pace. So it's not to rule
Yeah.
out the fact that it's still possible and it still can. But you
Right.
have to consider the fact that there is also the possibility that we'll have a downturn in the market, and then you end up out of cash and have a debt higher than the value of the property. And I think your advice is also even more salient for someone who's investing with the highly leveraged purchases, right? So if you're going at 90% loan to value and it's an investment property, 95%, whatever it is, now you're working on a very thin margin already. And
Yeah.
any downturn that wipes out everything you had, and then add those closing costs that you mentioned earlier, 60, 70
Yeah.
grand, you're out of pocket.
Oh yeah.
So
You
definitely
could be
worth considering.
underwater.
Yeah, yeah, yeah. I think it's now what it's becoming is the real savvy, or it's gonna become that. I don't know if the market how like where we are in terms of the changes that are recently happening with the rate hike that happened a couple of weeks back, and then
Mhm.
others coming. But it's kind of having that understanding of where to buy, like you were saying, looking at what the cash flow is, and then making sure that there's no negative cash flow, which was common for the last few years, wasn't it? You had a lot of people buying negative cash flow properties. So
Oh yeah.
yeah,
It like any property you look at right now, like if you buy, like for example, $1 million property and you put 20% down on an $800,000 mortgage, your payments are around, let's say, $3,200 a month. A lot of these properties, even the rental income alone doesn't cover the mortgage.
yeah,
So like that's the thing. Like not many properties are cash flowing in the GTA from a rental perspective. And that's one of the signs like, hey, this might not be a good investment. And my only option is to make money on appreciation.
hmm,
And so far, the people that have been betting on it have been good. They've done well over the time. But with the rising rate environment, that might not be the case anymore. It
yeah.
might slow down.
And then with COVID ending, we don't know what the economic outlook is. Right now, people are affording those higher rents, whoever is charging them. But if there's an economic downturn, then you have kind of everything collapsing at the same time. So hopefully that doesn't
Yes,
happen. But of course, always you have to keep that in mind. Completely
of
agree.
course.
So age old question: fixed versus variable rate. What do you think?
I love this question, and the answer really is it all depends on you, right? So, um, right now between the variable and the fixed. So let's just compare. Like we're at 3.59 on a 5 year fixed, roughly. Rates change every day, and we're about 1.65 on a variable. We're talking insured rates right now. So there is a difference in spread of almost like between the two. You're almost at 2% spread between variable and fixed right now. So the way I see it is like if you're saving 2% on your mortgage going variable, and we know the Bank of Canada is going to meet six more times this year, and they're saying that, I guess, worst case scenario, they're going to go up a quarter point at a time in the next six meetings. That means rates on the variable side will go up to 1.5% in general from where they are now. Well, if they do go up 1.5%, you're still lower than if you took the fixed. Because if you're at 165 plus 1.5, you're basically at 3.15. Meanwhile, today's rates are 3.59 for a fixed. So, me personally, I like the variable option for that point. Um, and also for clients, like if you're comfortable with watching the markets and knowing that your payment could change, or you might be paying more interest and principal on your payment on a variable in general than you were before, but you're still saving money compared to have locking into a fixed. I personally like the variable, and some customers don't want to have. It's kind of like anxiety. Oh, the rates are going up, and this is happening, and I could understand that. So when I have clients like that, I give them both options and I explain it in detail, and then I let them make that decision because at the end of the day, like we can only recommend, but the client will instruct us on what they want. So that's the main factor. And the other major part about the variable versus fixed is penalties. There is a huge difference in penalties when it comes to fixed rate mortgages, depending on how long you have left in your term, and variable rate. Penalties are usually 3 months of interest at the posted rate, for example, and it's a lot less than paying an IRD penalty or interest rate differential penalty, which could be the difference in interest that you have left in that term. So I've seen people pay penalties on fixed rates of up to like 4.5% of their mortgage balance. So 4.5% on, let's say, a $600,000 mortgage, you're talking, getting close to 30K roughly in penalties to break that mortgage compared to paying maybe like $3,000 in penalties on a variable. So there's always that difference there in penalties, and the difference that you're saving more on variable overall compared to fixed.
Yeah, and I think there were even studies done on the in the over the long term. They're looking at comparison of costs between the variables and the fixed, and almost always variable wins, right? Unless you have a very high. I think you mentioned up to 1.5% increase this year, and up to is a key word there because I don't think they're gonna be able to go that high. They want to. They're talking about it. I think it was supposed to be a 0.5% increase in March, but then because of the war, they went to 0.25.
Yes.
So might happen again, right? They talk about it, maybe they don't.
Yeah.
And part of it is they feel that talking about it impacts the market enough and then it cools down a little bit. So maybe that's what they're going for too.
Yeah,
Either way, I mean I'm not a mortgage broker, but personally I've always been on the variable rate kind of camp,
of course.
right? Where it's the better choice. Um okay, so now, I guess we're talking about, I guess, in the same light, the unpredictability kind of in terms of how the rates might be going up, interest rates might be going up, prices have been increasing. They might not keep increasing. We don't know.
Mhm.
So there's a lot of these different variables to consider. Now you have kind of lockdowns ending, so we'll see how that impacts the economy, whether we'll be having an expansion or a contraction. So what would you say within all of that? What should buyers be thinking this real estate season? Should they be kind of bullish, bearish? What are the thoughts?
So I think with buyers, I think there's a good opportunity for buyers right now because we're at this place right now. It's like a pause. People are not sure what's happening with the market. What I'm seeing right now, like in general, like a house that you would put up for sale used to sell within like 1 day or 2 days. Like before you could even look at it, it's sold, bully offer, this and that. But now I'm seeing properties actually sit for a little bit. Like, in a normal market years ago, a house could sit on the market for 60 to 90 days and it would sell, and there would be negotiation back and forth. And that's how you used to sell a home. But now I am seeing properties, they're still selling quickly, but you're actually getting more time to look and there's more options, especially in the spring market right now. You're going to see more people listing. So, like, you might have 10 bungalows for sale in the same area and you'll have more options. And I think it's a good opportunity to kind of lock something in. And especially now that the rates continue to go up for now, you might want to lock in something because your rates are good for 120 days. So why not lock in something and get in the market now? Because I would say, you know, if you're going to get in the market, there's never a perfect time because you can never time it. We don't have a crystal ball. We don't know what's going to happen. But if you can buy a specific home and you know you can afford it, no matter what happens with interest rates or property values and nothing changes, then I would say get in the market today into what you can afford. And I think it's a good time right now because you actually are able to look at properties without making a rush decision so far. Will this go on for the next few months as it's going right now? Who knows? Like people might say, "Hey, no, the market's going to be hot again," and people start going in, buying faster and closing faster and all that. But I think we're at a point right now where it's kind of a standstill, and people are like looking like what's going to happen with the next Bank of Canada rate increase. And I think there's an opportunity here if you were in the market to buy and last few months you had problems like getting something approved or getting the property accepted on an offer, this could be a perfect time for you to get in the market.
And are you finding right now it's easier because of this environment to get financing, or has it become a little harder, or has that been impacted?
Well, the stress test itself was 525 basically up until like a few weeks ago. Now, it's still 525 technically if you're getting a variable rate because let's say the variable rate's 1.65. The stress test is 525 or plus 2%, whichever is greater. If you're going fixed right now, let's say 3.59 or so, then your stress test has gone up a little bit. You're going up to like 569, which could be the difference between somebody qualifying for that amount that they were looking for before or not. So if you're going fixed, your stress test is going to be a bit higher, not much higher right now, but if it does continue to get higher, then that's going to be a big impact for people on what they can qualify for.
Makes sense. So the interest rates will play a big factor, I guess.
Yeah.
And if that stresses out the banks too, and scares them.
Yeah, because rate will usually dictate values. Usually, there's other factors, obviously, but like the higher the rates go, the more pressure it puts down on home prices. So if the rates go up really high, you can only imagine it's natural that the prices won't be going as high because if people can't qualify to buy these properties, then the sellers can't sell it to them. So if the rates go up too high or to a certain level, then you're going to probably see a little bit of a slowdown in regards to price appreciation, maybe even a standstill, maybe even a slight decrease. I mean, it's not abnormal for values to dip a bit. I mean, we did see it happen back in between 2017 to 18 when the government started implementing the stress test, implementing the foreign buyers tax. We've seen properties within a few months drop in value for a short period of time. Some people had panicked and sold and lost money on their properties, but the ones that had held on to those properties from that point in time to now are actually up more than they were when they first bought it. So it all depends.
I think it's or at least historically, I saw a few graphs online where they were showing the kind of the downturns and the upturns in the real estate market, and overall there was always an upward trend, but you had to be able to take those downturns, which were significant, often sometimes 20-30% or more in drops, right? So makes sense. It's like what I appreciated the advice you said in the middle, where you were talking about how if a buyer can get into a house and they can afford the payments, and that's what's important, because that's all you need to do. You need to afford the payments for your house, right? You don't have to worry about where the market is next year.
Mhm.
Then they can weather that kind of downturn as well, because in the long run, hopefully at least, prices keep going up.
Yeah, yeah, and it's
Um,
great if you're an owner. You've done very well in the last 5 to 10 years. And I always look at properties like, you don't want to look at it what it's going to be worth the next year, but you got to look at it as more long term. Like if you hold whatever asset you're buying, whichever property, you have to think to yourself, in the next 5 to 10 years, will this be worth more than what I paid for it? Usually 9 times out of 10, it will be, unless you're in a market at that point where it's shifting downwards. But overall, long term, and we could look at our parents and look at our parents' parents and look at how they've done, and historically, that's how it's gone.
Touche. Makes sense. Well, I mean, that was an amazing discussion. I think it was a lot of valuable insight for buyers, first-time home buyers, repeat buyers, investors, people just trying to understand where to navigate in this kind of market that's going up and down constantly. So before we kind of conclude, I just want to touch back upon how can people contact you. So if someone's looking to get a mortgage, what's the best way to contact you?
Yeah, so the best thing to do is call me direct. I actually leave my cell phone line as the best line to call, and I get a million calls a day, but I'm more than happy to take them all. So my direct line is 416-891-0349. That's my direct cell line. You got me there directly. And then I have my website, IssacJirjis.com, where all my contact details are there, my email address, fax number, all that good stuff, apps, downloads, everything's there. So feel free to reach out to me anytime, and we can book a time to have a call and discuss every client situation.
Awesome. And Isaac's website should be below. Thank you for joining us on this podcast. See you guys next time.
Thank you.
If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer to your signing appointment, everything is done from the comfort of your own home. No need to take time off to visit a lawyer's office for your signing, when you can complete everything from your living room table. The best part is you don't have to pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us today.